Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, very good afternoon to you. Happy Friday, and happy Friday on the D Street as well, right? 19,800.
Absolutely. Happy Friday. And actually, we are literally closing, hopefully ending the week on a very positive and a strong footing with Nifty actually reclaiming that 19,800 mark for the first time since July that we've actually hit that mark. If you look at Nifty Bank, that's the one that's actually powering the gains also coming in for the Nifty, because you have a lot of banking index also contributing to those gains. Talking about broader markets, charting their own course at record high levels once again in today's trading session. Both Nifty mid cap as well as small cap index are at record high levels. Your Sensex that is actually holding above the 66,000 mark as well. Talking about the rest of the market then, if you look at the advance decline ratio, as of now it is very much in favor of the advances. If you look at the sectoral indices, it's the realty energy index that are the top sectoral performer in today's trading session, while on the flip side you have the defensives that are actually mildly in the negative territory, not that much of a loss coming in. You have the FMC, the pharma index, that is the top sectoral loser, 0.3% downtick for pharma index, but most of them have actually recovered from today, from the day's lowest point. So that's the way how the markets are looking at. A lot of stocks, Vinny, actually hitting fresh record high levels in today's trading session as well.
Absolutely, but on that note, let's get started with all the stocks that are buzzing in trade either on the back of news flows or on the back of technicals as well. And before we get started with that, one important thing is in terms of holding companies as well. They are in focus as well, especially after the SEBI has actually floated a consultation paper, and this is on the voluntary delisting norms last month. Now, what is the impact of that? What is it? How does the holding companies actually get impacted by this? What can they expect going ahead? Let's go across to Somit to understand that and what is the impact on all this. Somit? Oh, okay, I think, yeah.
Right, Somit, we can hear you now.
Well, the holding companies would remain in focus, and this is because SEBI had floated a consultation paper which gives these holding companies the right to give the shares in the other listed companies to the public shareholders of the holding company. Now, do remember that this is still a consultation paper and nothing has been finalized yet. But given the fact that the date for putting in comments or giving comments has passed, we can expect the final paper to come in the next few months or in next few weeks. But what is this proposal that the companies have given now? That SEBI has given. Now, the proposal says that the listing holding companies can be given the shares of companies in which it holds a stake. Now, this will be done provided they derive nearly more than 75% of their value from this listed company. And the interesting part here is that the shares would be given in the proportion in which they hold shares. Now, for instance, if you see, Chola Holding is the listed holding company of Chola Finance. Now, Chola Holding's total outstanding equity base is close to 19 crore shares, and Chola Holding owns close to 45% stake in Chola Finance. Now, Chola Finance total equity base stands at close to 82 crore, which means that Chola Holding owns close to 37 crore shares in Chola Finance. Now, if you see Chola Holding's total equity base, that stands at 18 crore, and Chola Holding owns around 37 crore shares in Chola Finance, which means that the share proportion ratio will also be 2:1. Which is for every one share of Chola Holding, you will get 2 shares of Chola Finance. And that is what is most interesting about this proposal that SEBI has given. Now, do remember that this is completely dependent on the promoter or the board of the holding company to go ahead with this. There's no compulsion that they have to do this, but this is one of the options that now investing holding companies have if they want to go ahead and delist that company. Also, do remember that because of this, the promoter ownership in the main company would also go down, because there would be some equity dilution, and that is also one of the reasons why the promoter companies might not go ahead and do this. But what Macquarie's sales team believe is that at least there could be some reduction in the holding company discount that we are currently seeing. Now, if you see, Bombay Burma currently is trading at a discount of nearly 87% compared to the value of its stake in other listed companies. Similarly, Kalyani Investment is trading at a discount of 87%. Then there is Pilani, Vardhaman Holdings, Sumit Securities, JSW Holdings. They are also trading at a discount of nearly 66 to 83%. So keep an eye out for holding companies with trade, because if this proposal by SEBI gets approved and if companies go ahead and decide to delist the companies, these companies, public shareholders might get benefit out of this new proposal.
Okay, thank you so much for that, Somit. But on that note, let's get started with which are the other stocks that you should be keeping on your radar, and either on the back of news flows or on the back of technicals. They're buzzing in trade today. On the technicals, we're joined by Aamar Singh, while from the research team, we have Ashesha as well as Ankita joining in with us. A very good afternoon to all three of y'all as well. And Cheryl, as always, I'm going to be starting with the first stock that's in focus, and today we're going to talk about Havells, because we've seen a sharp up move coming in this stock. And why is that so? Because we saw a note that has come in from UBS where they're maintaining a buy on Havells and given a target price of 1,900 rupees per share. What are the key factors that they are highlighting is that in terms of the trends, there is a rising trend in terms of the quality that the consumers are moving towards quality products. Other than that, the width of the electrification in tier 2, tier 3 cities and towns, that has also started improving, and consumers are now shifting more towards the multi-format retail, which is going to be creating a growth opportunity for Havells. Now, other than that, UBS is highlighting that the companies told them when they met with the management that the company will continue to nurture multi-brands to tackle competition. And in terms of Lloyd's, the company had highlighted to them the profitability that should actually start recovering with a potential EBITDA break-even in a year's time is what they are highlighting. There's a strong confidence that they saw from the management in terms of margin recovery to the pre-COVID levels as well, driven by normalization and commodity prices, as well as the demand trends, which have been improving as well. Exports is going to be a key focus area in terms of growth as well for the company. And because of all this, in terms of favorable demand trends, penetration, capacity-led growth, along with margin levers, will be something that will keep Havells on the positive side. And that is why UBS believes that Havells could see a good opportunity in the next 12 to 24 months.
All right, that is Havells for you. That is in focus on back of the UBS note. But Amar, coming to you, Aarti Drugs, this particular counter, if you see, in the last 6 months, it's done exceedingly well. Where do you see this one headed from here on? Do you think it will be able to sustain those moves?
Yeah, very good afternoon. So what we've been witnessing in Aarti Drugs is that the stock has bounced back, and technically, if you look at the medium-term charts, there we see very strong momentum. And the structure also, the stock had earlier rallied towards 650, 660 levels and then corrected all the way towards 550, and currently it's around 618, 620. So technically, the structure is very strong for the stock on the medium term as well as the long term charts. On the upside, the stock would meet with somewhat resistance around the 650, 660 zone. So that's going to act as a very crucial resistance zone. If the stock is able to take that out, then the stock is headed for significant highs towards the 780, 800 levels. So one needs to watch out for 650, 660 on the upside. The structure, both from a short term as well as from a medium term perspective, looks strong and positive. And also we've seen some very strong buying coming in at the stock around the 575.
All right, moving on, let's talk about Shreyas Shipping. This is a counter that we don't talk much about, but the reason why this one is in focus is because the company has gotten in principle approval from BSE as well as NSE for the delisting of its shares. Remember, the Shreyas Shipping is a subsidiary of Transworld Holding, and the floor price as per the delisting regulation is around 292 rupees per share, but the parent company is intending to acquire the shares at an indicative price of 338 rupees per share. This is what the company has mentioned in their press release. The parent company, remember, that is the Transworld Holding, on May 21st had actually announced its intention to voluntarily go ahead and delist the subsidiary shares from the exchange, and the proposed delisting was approved by the company shareholders on July 3rd. What the parent company has to say is the fact that the delisting of Shreyas Shipping will transform the group's credit profile while offering a fair exit to the minority shareholders. Remember, this delisting will definitely be subject to various regulatory approvals, but for now they've got an in-principle approval from NSE, BSE for the delisting. So that's why Shreyas Shipping is in focus.
Surely keeping an eye out on Shreyas Shipping, but let's move on and talk about CDSL on the charts then. Aamar, what is the target that you're keeping for CDSL? In the last 1 week, it's gained almost 11%. It's seen an uptick today as well. It's buzzing. What is the target that you're keeping for this?
Yeah, I would say that CDSL continues to remain strong, and what we've seen that the stock did bounce back, and there was some earlier there was some selling pressure also. The stock had witnessed somewhere around 1100 odd levels. Currently, it's around 1270. Technically, it's very strong on the charts. We see the stock rising towards the 1350, 1400 levels from a short-term perspective. And what we are seeing technically on one of the medium-term time frames is that the stock has broken out of a consolidation, and also again, if we look for the last few trading sessions, so there has been a significant buying interest, and also the delivery quantity has been more than normal. So that clearly reflects that there is strength in the stock, and there is also some buying. I would say smart money which is moving in the stock. So the stock sustaining above the 1270, 1280 zone, the stock has a potential to rally towards 1380, 1400 in a short period.
All right, so that's the word coming in on CDSL. But Shesha, we had life insurance data that came out yesterday, but is that the reason why SBI Life is in focus, or there is some other reason?
There's some other reason. We have some strong management commentary that has come in. Morgan Stanley, in fact, met with the management of the company. They've given up strong commentary where they say that strong FY24 guidance, APE growth guidance of 18 to 20% is what the management has given. Favorable product mix shift will be driving VNB growth for the company from here on. The company also said that potentially higher commission payouts to Banca will be performance based, and hence it will not impact VNB margins for the company from here on. As far as architecture model of SBI is concerned, they also said that they see negligible risk to SBI as a result of SBI moving to architecture model, and they say that a mutual fund SBI, even if it has open architecture model, it ends up selling more than 95% plus SBI mutual fund products, so they do not see any risk as a result of open architecture model. So yes, strong management commentary has come in with respect to VNB margins and growth, on the back of which the stock is in focus today. It is not doing much, but strong management commentary has come in.
Okay, let's keep an eye on that. But let's move on, talk about Gujarat Pipavav. And Aamar, in the last 1 year, almost 60% returns. Last 6 months also, that momentum has continued. What are the charts now indicating for Gujarat Pipavav? Still more upside left for this one?
Yeah, I would say that what the stock has been witnessing is that there was some consolidation in the stock, and the stock was unable to breach the 120, 130 zone. Now we've seen the stock breach those levels and currently trading around the 140 mark. And also what we've seen is that as recent as 29th August, we've seen some significant volumes and delivery interest coming in the stock. So, and that was at a breakout level. So clearly, and also if you look at the long-term charts, when I'm talking of the long-term, both I'm referring to the monthly and the quarterly charts, they clearly show that the stock has broken out of a major consolidation zone. And even the medium-term, intermediate-term trend indicators are pointing to very strong upside move. So the stock now has the potential to rally. If it sustains above the current levels, it has a potential to rally towards the 180, 200 levels. On the downside, now the stock has got very strong support zone coming around the 120, 125 zone.
All right, moving on. Ankita, let's talk about Mazagon Dock. We know that this particular counter is buzzing in trade, not just Mazagon Dock. You also have all the shipbuilders also that are buzzing in trade. Why is it?
That's correct, Cheryl. Mazagon Dock's water stock, I mean, I think it is a gift that just keeps on giving. I mean, look at the move. Last 6 months given a return of 200%. Year to date, it's up 186% returns that it is given to the investors. And today also, you know, it is up 9% in trade. In fact, it was up 10% in trade. It has eased off a little. But this has come on the back of the news that the state-owned shipping company, of course, has signed a master ship repair agreement, which is called the MSRA, with the US government that's represented by the NAVSUP Fleet Logistics Center, Yokosuka. Now, this is a non-financial agreement, and there are only 2 shipyards in the country, including Mazagon Dock, which has signed an MSRA, and the agreement is expected to open up voyage repairs of US naval ships at Mazagon Dock. And on the back of this news flow, the stock is absolutely buzzing in trade.
All right, so that is Mazagon Dock and the reason why it is in focus in today's trading session. In a short while from now, you'll have Vinny who will talk about Cochin Shipyard, isn't it?
Absolutely, but before that, let's go to Aamar to actually talk about IRB Infra. Aamar, what are the charts now indicating for IRB Infra? 14% uptick in the last 6 months.
What is the target? What is the upside that you're expecting?
Yeah, I would say that IRB is one of the, I would say, very beaten down stocks, and we've seen the stock significantly rally, and the rally has been, I would say, for the last few trading sessions, almost 10 to 12 trading sessions, we've seen a sharp up move from 25 odd levels to currently around 33, 34 levels where it's trading. And also, the stock is very strong on the long-term charts. The stock is trading very close to its all-time highs also. So clearly, that shows that the stock has got very strong buying interest which is coming in the stock, and also we've seen significant increase in volumes in this particular counter over the last I would say 15 to 20 trading sessions, and that has been on the rise. So that really shows that there is definitely something happening in the stock, and the stock sustaining over the 30-35 zone, then it's in it could rally towards 45-50 levels. Whereas on the downside, now the stock has got very strong support base coming on the 25-28 zone.
Okay, surely keeping an eye out on IRB Infra and those levels over there. Let's move on, and like Cheryl said, there's another shipbuilder that is in focus, and that is Cochin Shipyard as well. Now, this is in focus. Why? Today we have a note that is coming from Kotak. Yes, they have downgraded the stock when you look at it to a sell from a previous buy rating, but they've increased the target price to 990 rupees per share from previous 740 rupees per share. Now, the main reason for this and why is it buzzing in trade also? Obviously, all the other shipbuilders are also buzzing, so that momentum is there. But we had the recent commentary that came in from the Chief of Naval Staff in terms of encouraging Indian Navy received encouraging commentary came in from him in terms of the growth, the orders that they're expecting to see there. And the Indian Navy also received the first indigenous built aircraft carrier, and that is one of the reasons why we're keeping an eye out on that as well. The case for repeat ISC orders is strengthening, and the Navy is eyeing a repeat order or INS Vikrant as well. Cochin Shipyard has gained manufacturing expertise, which limits the case of repeat orders going to other entities. So that's one of the factors. That's a bit of a concern, though. Potentially, what Kotak is saying, so they are factoring in a bit of a repeat order that could be a bit lower, 10% lower cost of IAC versus previously what we had seen. So keeping an eye out on that one. But today, surely buzzing in trade up 6.5%.
All right, moving on. Aamar, let's talk about NOCIL, because if you look at the chart of this particular counter, last 1 year, the stock has actually given negative returns. It's only in this year it has actually managed to post some gains, but not that big a spike. If you look at the chart also right now on the screen, only the last 1 month seems to be good for this particular counter. Where do you see NOCIL headed from here on? Do you think that this is an indication of some breakout?
I would say that on the weekly charts, so definitely this is a breakout, and that also on the back of significant volumes. So because if we go back in time, so for you rightly said that the stock didn't generate much returns, but from a medium term, intermediate term trend perspective, the stock has witnessed a major breakout on heavy volumes. But on the longer term charts, I would say that still the stock is not very, I would say, positive. So clearly that means that on the upside, the stock has a target towards 275, 280 in the short term. On the downside, the stock has got support coming around the 230 to 35 zone. So it's more of a short term play till the time we don't see the stock sustaining over the 280, 300 mark. The stock could be in for some consolidation with a positive price in the short term.
All right, so that's NOCIL for you, but let's move on and let's talk about a stock that is still near its 5-year high, and that is Coal India for you. If you look at the particular stock, it's gained approximately 4% on an intraday basis. Yes, 3% uptick coming in for Coal India, maintaining around those 5-year high levels. And why is that? It's because India's power demand has surged to an all-time high of 241 gigawatts in the first week of September alone. Remember, the country's power demand has already seen an uptick of approximately 23% in the month of August, and this is one of the highest rates in the world. And also, a rise in the power demand can boost revenues for the companies that are related to the power sector. Also, remember that coal transportation issues and lack of sufficient domestic coal to feed the projected power demand. The government on Tuesday asked all the power producers in the country to import coal to make up for 4% of their coal requirement. So one of those reasons, and also the fact that there is a surge in the power demand, therefore there will be a surge in coal as well. And on back of that, you can see Coal India soaring in trade, 3% uptick once again near 5-year high.
Okay, that is Coal India for y'all. But let's move on to the next one on the technicals, and that is REC. Amar, this one has seen a fabulous move coming in the last year as well. Last 6 months, as you look at it, there's an uptick that has been continuing for REC. What is the expectation in terms of the levels that you're keeping for REC?
I would say that this is one stock which definitely has given phenomenal returns, and also what we are seeing is that as recent as a couple of weeks back, the stock has had significant breakout, even at the, I would say, roughly around the 240, 250 zone, wherein there were significant volumes, and long-term charts are very strong for this stock. So effectively what it means is that the long-term and the intermediate-term trend both are very strong, as well as the momentum is there to stay. So effectively this is one stock one can look at accumulating on any significant correction. The stock on the upside has a potential to rally towards the 290 to 300 zone in the short term. Whereas on the downside, the stock has now found very strong base around the 240 to 50 zone. So this is one stock one should definitely look at from a long-term perspective, because when I'm talking about the long-term, I'm referring to the quarterly charts and the monthly charts. They are very strong, and so any correction should be used as a buying opportunity.
So that is REC. It is actually hit a record high levels in today's trading session. Shesha, NBFC, the entire space. Why is this one in focus?
Well, yes, Nomura in fact has come out with a note on the entire sector, on account of which all of these counters are in focus today. They say NBFC's reliance on bank funding continues to remain at elevated levels. Increase in cost of funding has been lower than the broader increase in interest rates for NBFCs. As far as their cost of funding is concerned, they believe that it could rise further. From Q1, it could increase by about 30 to 40 basis points before it finally peaks out in the third quarter of FY24. Benefits of potential rate cut that could happen in the first half of FY25 could flow in the second half of FY25. SBI cards 5-star credit access to benefit the most on account of spreads and cost of funding. But they also say that they expect LIC Housing Finance to be negatively impacted as its borrowings and loans are free float in nature. So on the back of this report that has come in, all of these counters are in focus today. SBI cards and 5-star finance are in the green, while credit access gramming is under pressure today.
Okay, surely keeping an eye out on all those names over there. But on that note, viewers, we're going to slip into a very short break. But as we go into the break, let's listen into the commentary that is coming from Welspun Corp. Strong demand from oil and gas segment will boost the growth guidance for Welspun Corp. That's the word coming in from Mr. Vipul Mathur, MD and CEO, in an exclusive interaction with ET Now. So let's go across and listen into that snippet.
With a higher margin mainly due to the lower steel prices and higher execution in US, and an overall favorable oil and gas capex environment is what driving the large diameter pipe manufacturers give a robust guidance for FY24. To understand this number calculation, I am Priyanka Kapal here in Anjar in Gujarat to understand what is the strategy ahead for Welspun Corp. And joining me this exclusive conversation is Mr. Vipul Mathur, MD and CEO, Welspun Corp. Mr. Mathur, very warm welcome. Thank you so much for giving us time.
Welcome and a good day to you.
Thank you so much. I wanted to understand, Mr. Mathur, that you've given a guidance of, and we've seen your numbers last year also, the guidance which is giving, the guidance that you have given for this year, FY24, is 50% revenue growth, 90% EBITDA margin growth. Where is this confidence coming from?
So we have to understand that this industry, the oil and gas industry, is undergoing a sort of a tailwind at this point in time. We were all thinking that around the pandemic time, that, fossil fuels are history, oil and gas has no future, renewable is going to be the only way moving forward. But I think so there was a harsh reality check which came in, which very clearly said that oil and gas is going to be there for a sustainable time. Of course, while renewable will take over at some point in time, but I think so that's quite a bit of a distance. So all that projects which had gone on the shelf, they were not on there.
Sure.
They started coming back on the table, right? So today, quite a few companies or quite a few countries, let me put it this way, are seeing this as an economic opportunity, and a lot of countries are seeing this as an energy security. I think this got compounded by this European war, the Ukrainian war,
Sure.
where every country wanted to have their own energy security, right? Because suddenly the gas coming from Russia to Europe stopped, and the Europe came to almost a standstill. So every country started thinking that, no, I need to create my energy security. So all the projects which were on, which were put on a hold, everyone started accelerating that whole process. And now we are seeing that traction coming back on the table. And I think that gives us the confidence that, there would be, all the countries in the world, especially, the Middle East, the Southeast Asia regions and all those countries will aggressively play a role in terms of developing.
And that's why we're seeing a higher execution also, especially from regions like US. So since you mentioned Middle East and Saudi, and which is a good market share for you, nearly 25% of your market share comes from that region, and we've seen a very robust capex cycle from that area. What is the visibility that you see from that particular area?
For the last 3 years, we have been extremely busy with on the water side of it. And water is, you must understand, water is even more expensive than oil there.
Yes.
Right? So it's a very, very expensive commodity, and they play a lot.
Water is the oil for them.
Water is all for them. They pay a lot of emphasis on that. And we have to understand the genesis of water. They have seawater, which they need to desalinate. And that desalinated water need to travel to their habitation, which is 1,000 miles away.